Hello and welcome to Market Call. I'm Mark Bunting. For the next hour, we have David Burrows. He's president and chief investment officer, or strategist rather, at Barometer Capital Management. He's taking your questions on North American large caps. Here are the ways to reach us if you have a question for David. The toll-free number is there on your screen. There's the email address and the Twitter handle is at Market Call. Good to see you, sir.
Great to be here.
Now, if you're interested in the Apple event, we are live streaming coverage at BNN.ca with Michael Hainsworth and Amber Kanwar. So tune into that, or watch both at the same time. Do that whole second screen kind of thing if you want. Now, you're an Apple holder. There's always so much hype going into one of these events. Cut through the noise. What are you focused on today?
I mean, ultimately, what Apple's trying to do is reestablish some growth in the business. And they have a history of trading up into these events. And they tend to back off a little afterwards. So I think it's really going to depend on what they come with. There's high expectations for a watch, high expectations for some new handheld devices. And we'll see if there's something on payments. Payments potentially could be quite interesting depending on how the business model works. But this is something that lots of companies have been trying to do, and Apple probably has a critical mass to drive.
So when this event is over, do you think you'll be impressed with the phones, the mobile payment technology they come out with the smartwatch?
So clearly they've set up this event as a major event. They're using a big venue. They've invited a wide swath of experts from different fields. So I think that there's a lot of expectation. I would expect Apple to deliver some really great products. And at the end of the day, an investment in Apple is just an investment in some very secular long-term themes towards wearables and towards wireless data. And, you know, they're the incumbent. So stock's been behaving well into the news. It's in a strong sector, consumer and technology. So whether or not it trades up or down today, probably market signaling that they're going in the right direction here.
Let's broaden it out to the markets in general. Last few times you've been on, you keep saying we're in a secular bull market. I can't imagine your views have changed.
No, I think that when we look at the signals that we look at, we do a lot of work at trying to understand what the market is telling us. And in general, in a healthy market over time, a broader and broader number of securities should be participating in market strength. When I came on in the spring, the developed markets really were leading the world, led by the US, followed up with Europe and some other developed markets. We've seen buying in equities spread beyond developed markets into developing markets. So certainly China's behaving better for the first time in 2 years. We've got Latin American markets behaving a little bit better. So in general, the breadth of buying in equities has been expanding and does not look overcooked when we look at credit markets. Corporations are being able to borrow money at very low rates. So the excess return they have to pay over what a government pays to borrow is very narrow, which means that the market isn't concerned about business risk at this point. So we think that we are still in relatively early days of investors putting money back toward equities from fixed income. And we'll get little pullbacks along the way. I think we've had 2 to 3% pullback since 2012. That's the hallmark of a bull market. Short, sharp corrections that don't last long because there's buyers underneath the surface, not necessarily chasing a return, but who need to get a return. And so the characteristics of what's working are things that have an improving ability to pay. They are not necessarily, chasing high flyers. They're looking for cash flow and predictability and consistency.
Is the leadership changing at all in terms of which types of stocks are leading the way?
Well, I think that there were a lot of people who pointed to the fact that earlier this year, financials and consumer discretionary stocks had lagged. They have been the leadership off the bottom since 2009. But in the last month or 6 weeks, financials have reestablished leadership. Consumer discretionary has reestablished leadership. And it should, because we've had falling inflation, and that's great for the consumer, great for developed markets. So leadership is persistent. Technology hasn't misstepped along the way either.
All right, David, we'll take a break and also continue to monitor what's coming out of the Apple event. And right after this, we'll get to your questions on North American large caps for David Burrows.